Good morning. Today I want to go through my GBPUSD trade, which I entered on the 1st of July 2010 and exited on the 2nd of July 2010. Now before we get started, I just wanted to say apologies that I haven't done a video in a while. I've been very busy with the website, etc. Finally up and running now, and we're running the live classes, so if you do want to sit on one of the live classes, then please do get in contact with me. Okay, so starting off as per usual on the daily chart, this is the GBPUSD, as you can see here. For the past couple of weeks now, or the past 3 weeks, we've been in this quite aggressive uptrend, in the sense that it's taking out this high here. So you can see if we go back a bit further, don't forget this is the daily chart now. So the market's moving down quite aggressively here, and you've got a high here, the low is here. So we're just doing some basic highs and lows of this market just to show you guys what kind of trades you should be looking for. So before you start your trading day, you should be going on into the daily chart, identifying where the trend is, identifying certain key levels, and what you expect to happen on that particular day. Okay, so as I said here, there's the low here, and this is the lower high. However, this point here, this is the first point in a while which you've seen a higher low. So basically what I mean by that is that this area here failed to aggressively push down further and take out this low here. So temporarily now you know straight away that this market's either, it's temporarily stopped its downtrend, and you know that it can either go sideways in a sideways trend, i.e. it's gonna bounce around this area until it gains more momentum to push further down, or it's going to return to the upside. Okay, so when this happens, so you see this high here. When this happens here, and you can see that this high has been broken, you're technically kind of almost in an uptrend then, or in a temporary uptrend, while this correction from this move here, moving down. Okay, so we're in an uptrend, so we're looking for places to buy this market. Yesterday was quite a unique day in the sense that it gave you a few clear signals that it was going to go in the upwards direction, and also it really did tell you that it was going to move in an aggressive manner, as it did. So you can see here the key line here is this blue line here. So if I zoom in, you can see. Don't forget this is the daily chart now. So this is the area where you're likely to get some key support around this blue line here. You can see if I come back here, what happened when it touched this blue line last time? It aggressively moved away 200 pips, which is what's happened when it touched it there. It touched it again almost here. What happened then? It aggressively moved away 200 pips. So you really got to be looking out for this thing. And when it touches this blue line, what's going to happen? So you can see the past 2 times it's rallied about 200 pips away from that actual blue line. So that's key one, or factor one in your trade plan. So if the market does go down there, you need to be going down into smaller time frames to identify getting in a long position, which is a buy position. Okay, so with that in mind, and the fact that the market should be repeatable in the sense that if it's done it twice before, it should do it the 3rd time. That's the consensus of when you see this type of thing. It's all about probability, so you should be taking probability onto your side, and thinking when it is going to touch this blue line, it's going to rally off it, or it's going to aggressively move away to the upwards direction. Okay, so if we go down into the 4-hourly chart now, you can see in a bit more detail the trade plan coming together about how we got long with this market and where we bought it and where we actually exited the position. Okay, so this is the GBPUSD 4-hour chart. You can see that I've drawn this price channel in here. So this is quite a key thing. You guys have really got to be on your toes and drawing these lines in, as they really do help you. You can see the markets started this kind of upwards channel around the 7th of June 2010. It touched it again around the 17th, 18th of June, this area here, and yesterday it touched it again on the 1st of July. So this area seems to be temporarily, for the time being, quite a strong level of support, upwards support line. So that should really be on your charts. And also you can see there's a guide, kind of a price guide to the top of the channel where the market seems to have been topped out. It's only rough, but it gives you a good indication of kind of the range at which the market is bouncing between in an upwards direction. Anyway, going on from that, we're going on to the trade that we did yesterday. So you can see, like I said, we've drawn in the parallel rising channel. Okay, so like I said in the beginning, you're really looking for areas of areas of support and signals that the market's going to go in an upwards direction. This really comes. I mean, you're looking to buy this around this when it touches the 21 from the daily chart. You can see now if you'd really waited for the 4-hour close, that you'd be kind of you'd be getting long in the middle of the channel, which isn't ideal. However, that is a strong belt holding candle, so it does indicate that the market has got strong momentum and will push up higher. I really feel that basically you would have lost a lot of opportunity to kind of really get long of this earlier in the day. So what I tend to do is when I see these longer term trend lines and longer term EMAs, I tend to draw them on my shorter term time frames to get me a much more aggressive entry. So you don't want to be doing this when you're trading this. You don't really want to be doing this on your full size. You want to be. It is a bit slightly more risky than waiting for the 4-hour candle to close. You want to be kind of getting into the smaller time frames with a smaller lot size, minimizing your risks. That basically, if it does go wrong, then you're not really you're losing kind of half as much as you would usually, really. Okay, so if I go down into the 5-minute chart, which is probably the best one to show you, if I go back a little bit here, you can see basically this is the key area here. So the market, this is in the morning of the 1st of July, yesterday morning. So you can see the market here is moving down nicely. So it's lower lows and lower highs. You can see there's a lower. Here's the high, here's the low. So here's the high and here's the low. So you can see the market's moving down. Then suddenly, what happens? The market turns around at this point here and then puts in a higher high. Now that is your kind of key indication. That is what you really need to be looking for on your 5-minute chart. That indicates to you, right, this market has found support off that 21 EMA on the daily chart. It's found support off the trend line, which you can see is roughly done in here. Don't forget this trend line. Quite a good trick for you guys is to zoom out to the 4-hourly chart. Draw your trend lines in and then come back into the 5-minute chart so that you can kind of get those lines on your chart a little bit more accurately than you would do if you had to do it in a 5-minute time scale. So that's exactly where I entered right there. Reason for that is that basically, as you can see here, the market has now failed to push in a lower low than this region here. It's just put in a higher high, and you can also see that there's a small area of support around this area here where my crosshair is. So here, here, and here. So this region here is, there's some sort of support here. Okay, so what kind of exit strategies are you using? So the best way to manage this is either on the 5-minute chart or on the 15-minute chart to get as much profit as possible. So if we go into the 15-minute chart now, you can see basically the aggressive move up. So this is where we entered around this region here, 145.03. This is a really aggressive move up. We did expect it to move aggressively up, as I've shown you on the daily chart. The last 2 times this has happened, it's really aggressively moved 200 pips away. So we're kind of thinking, is it going to go 200 pips? Is it going to go that far? Is it going to go further? We don't really know. We've got that 200 pips figure in our head from the daily chart and previous days. We've also got the price channel guide, which is a good 300 pips away up here. So it's very rarely that the chart will go. The market will go 300 pips in one direction without retracing, and in one day. So that's pretty rare. So you're not thinking it's going to go 300 pips. However, that's your overall target at the top of there in this price channel. The best way to manage this and how I managed this was basically higher lows and lower highs on the 15-minute chart. So this is as you can see, this is the 15-minute GBPUSD. This is this aggressive move up here. You can see strong angle and separation on all the EMAs, which means there's strong momentum in the market. Okay, so you can see that this is the high here. It pulls back to the 21, pulls away. That's quite a valid re-entry, by the way. If you wanna buy that again, that's quite a valid re-entry when it touches that blue line. Puts in a higher high. We're still happy here. Comes down, puts in a higher low, which is fine, and then puts in a higher high, which is fine. So we're still in an upwards direction, and we've still got momentum. You can see the lines have now become flat, and then it actually put in a lower low than this low here. So I got out a 151.54, which is just where it's passed again now. So this region right here. So you can see, there we go. So that's exactly where I got out of that region there, which netted me 251 pips, which isn't bad for one day. Just to give you guys the heads up, there's non-farms today. The best thing to do in non-farms, and what's probably going to happen and what we're going to do in the live class, is that the market probably will, you just basically have to treat it as the news event as an opportunity to buy anything really. So what tends to happen in these type of things after a big day like today, the market may, if the news is slightly negative, the market will be pushed down. I think maybe 50 to 70 pips. I just use that as a buy signal, because if you look back at the daily chart, you can see that this candle yesterday really is a strong engulfing candle. There's quite higher prices to come, maybe 200-300 pips in the next coming week or so. So just treat that non-farms as an opportunity to buy if the market trades lower. Just try and buy it somewhere sensible. Okay, hope that helps. If you've got any questions, then please do contact me. Can you please rate the video as well, as this helps us move up the rankings in YouTube. And as I said, if you do want to sit on any of the live classes that I do, then please get in contact via my website. Cheers.